Hi, this is Zach with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 5th of January. Starting off with the FTSE 100, where there's disappointment in the air. One can say that looks as though we've hit the top of the range there, just below 7,800. We've got a former resistance line, which could become new support there at 7,600, but below that, there's the risk of just trading back to the bottom of the range and the bottom of that rising trend channel from back in March last year. At 73.20, we've got an RSI trend line break as well, the first one since the end of October, which isn't very friendly either, but at least while we're above that 7,600 level, we've got the chance of retracing recent gains and heading up towards 77.80 or even 7,800 again later this month. Moving on to the DAX, where there were cracks in the recent rally from yesterday, and they seem to have continued now. We were basically hoping that this market would stay at or above the old July peak, 16,500, but we're just below that at the moment. Below the 16,500 level, we've got the risk of heading down to 16,100, which was basically the old August-September resistance, and actually also briefly resistance on the way up back in November. On the upside, we need to really crack 17,000 to give us a new leg up, which at the moment looks rather unlikely, up to 18,000 and that January 2023 resistance line projection. Most likely scenario at the moment, I suppose, is that we just bounce off the 50-day line, now rising near 16,000 on the floor of this current setback. Moving on to the Dow, and here obviously a stellar run that we've had and maintained most of it ahead of today's non-farm payrolls. Rising trend channel there from October. Support there at 37,300, let's call it. Below that, the risk of 37,000, and hopefully at this stage not looking for anything lower than that. A break of 38,000 could give us a fresh leg to the upside as high as 39,300, or even more actually over the course of the rest of January. But we have to get through this latest pullback and see how far we head lower. On to Bitcoin, and the position here, it's been consolidation near the high levels. Currently in a range between around 41,000 and 45,000. We've got the floor of that rising trend channel from October there around 43,000. Above that, looking for 50,000 as soon as the end of this month, which is the top of that rising trend channel from back in October. Just adjusting that a bit, but to 50,000, the target there, while we're above the low 40,000s. On to gold, which had a bit of a rug pull last time we looked at it. Here, trading either side of that old resistance line target, 2060. We want to see it back above that to give us the chance of a move towards the $2,200 area by the end of next month, I suppose, now the way things are going. On the downside, hoping that we will not have anything lower than the 50-day moving average, currently around 2020. Moving on to the stocks, and one of the happiest situations of the week has been Angle, and here we had a initial target there around the 23 pence level. Above that we were looking for 35, and in fact today we got 37.5, so that was very nice indeed. Current view is that while we're above the 29 pence area, which is basically post-February resistance, we could still have a further, or at least a retest of the 35 pence plus area, even if that is the limit of the current rally or recovery that we've had. If you look back, you can see that after 35 pence, we've got a gap to fill up towards 47, but that might be a little bit ambitious over the near term, considering that we've come from below 10 pence since or at the end of November. But if you are a fan of the shares, the ultimate target here could be to fill that gap there up to 45, 46 pence. Moving along to a stock which may be starting a decent move, but early days yet. But here we've got Bluebird, and here the excitement coming from a potential broadening triangle base, top of that triangle heading towards the 200-day moving average around a penny, and nice to see a bit of a shuffle there for the shares above the 50-day moving average, which is now rising actually, so that is a decent signal, and that also comes after the bear trap from below December support at 0.55, above the 50-day line at the moment, which is at around 0.6. Looking for a penny by the end of next month. Moving on to one of the stocks of the week, getting a big chunk of change from AstraZeneca. Here you can see C4X, and it was rather surprising actually, given how much money exchanged hands and how good the news was. Even reported in the newspapers that C4X didn't rise that much that quickly, but maybe people were just gathering their thoughts. Current situation is that we've hit our initial target there up to 17 pence. Above 17 pence, we're now looking for as high as 25 pence, which is the top of that triangle there from the beginning of last year, red line resistance line projection there on that. At this stage, only well below the November resistance area at 13 pence, really delaying the idea of a gain towards the mid-20s. Moving along to another biotech, seems to be the new year seems to have brought in a lot of biotech interest, which is amazing. Here we've got Evgen, and it's broken through the 50-day line, the blue line there for the first time properly since back in June, so there must be something going on there. The other thing to note is the way that we've had bullish divergence going into the current turnaround, and that means that we've got a target for 2.6 pence near the 200-day moving average by the end of next month, especially while we're above that 50-day line at 1.75 pence. Another biotech company is Genflow, and here you can see that we're just breaking the resistance line there from back in June, and also breaking the 50-day moving average. We had a full storm back in November, so maybe it'll be second time lucky while we're above that 50-day line at 1.6 pence. Looking for the top of that falling trend channel from April as high as 2.7 pence by the end of next month. Moving on to a stock which I covered quite recently, and it's good to see that Guild Esports has hit the target there, which was at a penny, above a penny. We're looking for the shares to have a new leg up towards 1.4 pence by the end of next month. Ideally, they stay above the November resistance area, which was around 0.87. In order to do that, below that then would negate that potential target there. But as I said, above a penny, looking for 1.4, while we're above 0.87. Next up is Horizonte, which has had a bit of a rough ride in the recent past, as you can see from the chart there. It was a great October. But looking at the shares close up, you can see that we had a bear trap gap reversal, and then we held the top of that gap, which was way down at 8.6 pence. We then broke the gap up day, which was at 13 pence, and above 13 pence we were looking for 16 pence, which was the old support for the shares. Now that we've done that, the next target above 16 pence is up to 22 pence, which I think would be quite a relief, given that we've nearly sort of tripled off the lows there on that situation. But nice to see the shares above the now rising 50-day line, and then also recovering the old support there from back in November. So above 16, as I said, looking for 22 on Horizonte. On to Marula, which was one of my 24 for 2024. And here we've got a rising trend channel that's been in place since last April. Nice consolidation at the moment above the 50 and 200-day moving averages, which are both rising. That type of consolidation tends to be the forerunner of a move to the upside, and we're looking for 20 pence as soon as the end of next month, while we remain above that 50 and 200-day moving average area around 11 pence. So reasonable risk reward there on that one. Stock which I haven't looked at for ages, largely because it's been in the bin, is Madetech. But here we've got the possibility of a rising trend channel base. We've got that nice sideways shuffle, as I call it, along the 50-day moving average, which has been going on for the last 2-3 weeks. And if you look closely, you can see that the 50-day line is now rising, so we should be due a decent rally in the shares, and at least head up towards the top of that channel there at 15 pence by the end of this month. Maybe even a bit higher up to the 200-day line, which we haven't been above since back in March, and that is at 16.5 pence. Upside valid while we hold above that 50-day moving average. On to another biotech situation at the moment, Genflow Pharma, and here we've got a V-shaped bull flag breakout, as I call it, after the bounce off the 50-day moving average, which was noted recently. I suppose this is the second time lucky after the failure there at the floor of that gap. But above the floor of that gap at 1.1 pence, we're looking for the shares to fill the gap up towards 1.4 pence over the next few sessions, hopefully. Best case scenario target is up to 1.7 pence by the end of next month, at the top of that falling trend channel from the beginning of last year. Good to see the next stock deliver on the charting message. Here we had a bear trap gap reversal, double gaps there, and it was noted that the shares were looking quite attractive around 0.16 after the latest gap there. We've gapped up again and we're looking for 0.24 pence on this as a technical target on Oriole, hopefully over the next week or so. We've already been up to 0.22, so not too far off our goal there on that situation. And the upside value, while we hold above the floor of the gap there, around 0.18 pence. The last two are next, and first one is one which I didn't really want to look at, but forced myself, and I'm glad I did because the shares are up 34% today. Here we broke out of a falling wedge at Reneuron, and above the 50-day line at 4.25, we've been looking for 6 pence. So far we've had 5.65, so not a bad result there. Hopefully we'll get that 6 pence, taking it back to where it was in October by the end of next week, let's say. Finishing off with a requested stock, Staffline, and here, not the sort of stock I normally look at, but here we've broken above the 50-day line for the first time in 3-4 months, which is nice, in September, and above that at 24.25, let's say, looking for basically towards 30 pence by the end of next month. You can see the top of that broadening triangle there at just shy of 29 pence, but the key here, holding above that 50-day moving average, and a bit of bullish divergence there as well with the lower lows for December but higher RSI trace. That's it for me today. More updates over the weekend.